Hi, my name is John Stevenson, the Guaranteed Retirement Guy, and we're going to be talking today about the major differences between an IUL versus an annuity. So IULs and annuities, they're both sold by life insurance companies. I would say that is the main, that's what they share in common, but that's it. So let's talk about the differences. Well, an IUL, it's a universal life policy, right? So what kind of policy is that? Well, that's a permanent policy. That's a policy for, of course, benefits. If you pass away, you get tax-free benefits for your beneficiaries. But a lot of times what people will set these up for is for tax-free income that they take in the form of loans later on during their retirement. Now, these can be tricky. You really have to set them up right. You have to fund them long enough in order for them to work. I have people call me and they're like 65 years old and they're like, I want to set one of these up so I can take income. And I tell them, no, unless you're going to take income at 85, no, don't do it, because you're going to have tons of insurance costs in there and you don't want to eat away all your cash value, and you're not going to have the income that maybe your other advisor is telling you you're going to have. Now, if you're in your 30s, 40s, maybe even early 50s, then yeah, we could sit down and talk about this. The one thing though is you need to be healthy and you need to be willing to put a lot of money into these. I would say at least $500 a month if you're in your 30s. Okay, but anything, if you're older than 35 or 40, then you need to be more aggressive. Okay, you need to be putting in $750, $1,000 a month, $1,500 a month, $2,000 a month. You really need to be aggressive because you need to overfund these policies. You need to keep the death benefit super low, overfund the policy so that it has enough growth from the index over and above your costs so that you're able to have a large enough amount in there that's earning enough interest to cover the cost of your tax-free loans for your retirement income, as well as the cost of insurance that you will have until you die. Okay, so you have to make sure you put enough into that so it doesn't lapse. Otherwise, you'll put too little and then it lapses and you lose everything. You lose your cash value, you lose your death benefit. You don't want to do that. You want to make sure it's set up correctly. Now, there are people that will set these up and it's very popular to put in 100, 200, 300 grand a year. Some people will put in several million per year. And you can do some pretty cool stuff. And it's very well known for the infinite banking concept. Okay, but that is how that differs from an annuity, because an annuity contract also sold by a life insurance company. It gives you a contract of income. Or if it's a MYGA, maybe it's a fixed annuity, just with a fixed rate of 4 or 5%, whatever you're getting. It's just like a CD. At that point, it's just giving you a straight rate of growth every year, and it grows tax deferred, which of course a CD does not. So that's what it has over a CD, is that it grows tax deferred. And then, of course, at the end of it, you could take your lump sum, everything you put in plus your earnings that's been compounding over those years. Some people choose to live off the interest and they'll just get back their lump sum. So you can choose to do that. The downside of those, of course, is you don't have as much guarantee as far as income that you would have from a fixed index annuity with an income rider. Those typically will pay you a lot more for life, and you never have to sit there and try to manage it and roll it over into other contracts. And if interest rates go down, you're not stuck with a lower lifetime income because you have to keep on rolling the MYGA contracts into another contract, into another contract, into another contract. And so that can be tiresome as you get older, and especially as interest rates fluctuate and change, you never know what your income is going to be. So right now, interest rates are high, and so people are locking in huge amounts of lifetime income from fixed index annuities with an income rider. So they're both contracts. IUL gives you a contract and it's for death benefits, okay? And you can leverage that and you can take loans off of that. An annuity is a contract for either a stated rate of return or a contract with an income rider that guarantees you guaranteed income for life, whether it be just for you or maybe you're married, for you and your spouse. And that's what's nice about that, is that contract lasts a lifetime regardless of what the account value is. So your account value can go to zero in 15 years and you can take another 20 years of payments. Does not matter. That's what's nice, is you get that contract of income and it is guaranteed. With an IUL, it is not guaranteed, okay? Every projection in there is a projection. Okay, it's an illustration of projected returns, hypothetical returns. So make sure when you're getting these hypothetical returns, make sure they're in the range of like 5 to 7%. That is a safe range to project these returns. Okay, anything higher than that, they're blowing smoke. Okay, but if you're looking for guarantees, you want to absolutely make sure that that income does not run out, does not go down, and is guaranteed for the rest of your life. So if you live to 110, then you need an annuity contract, because annuity contracts are for longevity risk. Okay, they are for making sure that you do not outlive your money. Okay, so I hope that makes sense. If you want to go over this further and you want maybe you want an IUL and you want to see how this would work for you, maybe you want to be super aggressive with your contributions to it. Let's talk about that. If you're looking for an annuity and you want to be shown everything that's on the market, let's talk about that. Okay, you can book a call. There is a link below this video, and you'll be able to get straight into my calendar. And I'll also send you a link to a Zoom meeting. So we will go over it in person, over the screen, and I'll be able to show you everything that's available, and you can ask your questions, and I'll be there to help. And of course, if an annuity is something that you would like, or an IUL, I can help you with both of them. So anyways, hope that helps. I appreciate you watching, and we'll see you next time.